And Brian Skelly, he's back with William Raveis Mortgage. He's the mortgage man. So we've got to start with, and I think I talked about it a little bit last week, but we got to start with Brian's thoughts. He's the mortgage guy, scheduleloanappointment.com to connect with him on what his thoughts are on this 50-year mortgage plan. So, Trump put this message out there a couple of weeks ago, within the last couple of weeks, put a side by side with him and Franklin D. Roosevelt. Franklin D. Roosevelt, the president that introduced the 30-year mortgage, and Trump, now the guy pushing the 50-year mortgage. The headline on his post was "Great American Presidents." And shortly after he posted that, the FHFA director, Bill Pulte, confirmed the idea, saying, "Thanks to President Trump, we're indeed working on the 50-year mortgage, a complete game changer." This would have to go through Dodd-Frank Wall Street reform. So it's got to go through the Qualified Mortgage Consumer Protection Act. And this was all passed after 2008 financial crisis. And, you literally need an act of Congress to get this through. But it's an idea where the administration is searching for affordability ideas. Brian, do you like it?
Well, spoiler alert, I think we're probably going to, if I had to choose just simple yes or no answer, like, is it a good idea? Should we do it? I'm probably going to say no, I don't think we should. But with that being said, it's a little more complicated than that. There are some pros and cons. I know it hasn't been super popular. I think I've seen some of your videos online. I kind of have an idea where you stand on it, but I thought it might be interesting, even though I'm not advocating saying this is a great idea. I certainly could make an argument of some of the benefits of the 50-year mortgage. So I thought that might be an interesting conversation for this show to kind of look at, well, what are the pros and cons of something like this?
Yeah, maybe you can change my mind. I mean, I think it's a pretty dumb idea. I think it's just political theater. But if you think there's benefits to it, you're the expert. Walk me through them.
Sure. So, and sometimes I change my own mind. I really like kind of looking at both sides of a topic and seeing, what those arguments are. So I think one example that if the product comes out, there are talented salespeople in the mortgage industry that will sell the product, and if the product's available, people are going to get it. I mean, if you look at what happened in 2008, the mortgage meltdown, there were some very risky products at that time. There was an interest-only product. There was a 2-year adjustable. And I would say those are definitely much worse than a 50-year mortgage. But because those products existed, the consumer's going to find a way to the product if it exists. So once you kind of open Pandora's box of having this mortgage product available, then as a mortgage professional, I'm going to be obligated to include this in the list of options available, just like I do now. Okay, you can get your 30-year, you can get your 20-year, you can get 15-year, you can get conventional, you can get FHA. Here's all the pros and cons. Here's the option I think is best for you. What do you want to do? So, I mean, one example that someone might give for why 15-year is the example of, well, what if you bought a house in 2020 with a 50-year mortgage? Would that have been better than not buying a house at all? And, the argument there is home prices have increased dramatically since 2020. Or even if you bought a house in 2005 or 2010 or 2000 with a 50-year mortgage, would that have been better than not buying a house at all? And I think if you just look at real estate appreciation, one could make a fair argument that is maybe better than not buying a house at all, just to get in on that appreciation. You want to offer the flip side of that? I mean, what do you think 2020 to 2025 has been normal for home appreciation? I mean, that's the counter argument to that one. What do you think?
Well, I mean, 20 to 25 has not been normal appreciation. It has been high levels of appreciation.
Yeah, exactly. So
you're not going to see that.
It's been much higher than average. So the counter argument of being like, well, yeah, you could give that example from 2020 to 2025, definitely better to buy with a 50-year mortgage than not. But were not typical years. So, I mean, if you buy with a 50-year mortgage and maybe you go through a period of time where home prices don't go up a lot, you're not going to pay the mortgage down a lot, and you might have to sell it. You're more likely to have to sell at a loss if you own a home for 5 to 7 years with a 50-year mortgage, and if home prices don't go up, just to cover the cost of buying and selling, taxes, real estate commissions, attorney fees, etc. So that's one argument. Another argument that I would potentially use is that it could be a good fit for some people in some situations. Let me give you an example. So, like, I talk to a lot of people. There's a lot of folks that are just finding housing expensive. They're amazed at how much rents have gone up. They're amazed at how much money they're spending in rent, and they're like, "I'd really like to buy something," but they're just limited based on their income, and so they go, in some towns. It varies by town, but, like, let's say somebody's approved for a 30-year mortgage. The most they can get approved for is like 320,000, and let's say they go and look at houses in a particular town for 320,000, and they're all just really old, beat up, distressed houses. They need a ton of work. They're dirty. They're outdated. The floors are messed up. It needs repairs for this $320,000 house. And then they look online and they see a house for like 370, and it's just like night and day in some cases between a 320 house and a 370 house. It's like livable. It might not be a brand new modern fancy kitchen, but it's livable. It's got working heat. It's a place where their family could live. They can build some equity. And for those folks, just going from 320 to 370 or even 320 to 350 sometimes makes a huge difference in the quality of the home or whether they can buy a home at all. So, I mean, I think you could make that argument as well. For some folks, an extra $30,000 in purchase price makes a huge difference in the quality of the home that they can get or whether they can get a home at all. And, maybe most folks' income will go up over time. You could also make this argument too. So yeah, maybe it's not a great product because they're not paying a lot of money down on the principal. And maybe it's not a great product because if they actually keep it for 50 years, they're going to pay a ton more interest. And this is all, of course, true. But if they can just get into that 350 house and make those minimum payments for a few years to get their foot in the door, and then maybe 3 or 4 years down the road, rates go down, maybe their income goes up, maybe they refinance to a 30-year. All these things are possible and potentially could be a good argument. Um, but the downside to that is the temptation to just make that minimum payment and not refinance the 30 or maybe not pay extra. I think that's really human nature to not
Well, I mean, I think
do that.
yeah, I mean, I think to me, the biggest, like, when I look at the actual numbers, if you take a $400,000 house, the monthly savings, if the interest rate is a 0.5% higher, which it likely is going to be, just like you have the 15-year mortgage is a 0.5% lower than the 30-year, everybody's running numbers in, basically a fake scenario. They're running it on a 30-year fixed mortgage and a 50-year fixed mortgage having the same exact interest rate. Well,
Really good point.
that's not going to happen. And so if the rate is a 0.5 point difference, like the 15-year and the 30-year kind of sit today, obviously that can change. If it's a 0.5 point difference on a $400,000 home, your savings is $116. And you've tacked on it. So, like, if you're making $100 decision, I get what you're saying about a $320,000 house versus a $370,000 house, and on a payment that might be like $100-something decision. But I don't know. I mean, I've always given advice out to people. It's like, maybe it's not time to buy a home. I mean, if we're talking about $100 decision, boy, when an AC breaks in the middle of the summer, or insurance jumps up, or these Connecticut towns love to change taxes. It's the favorite thing to do is increase property taxes. They do it all the time. When taxes go up, then what? And so everybody just plans on always making more money. That really only happens if your skills improve. And so That's kind of where I get hung up on this. Like, it's just, I mean, I was expecting to see a bigger number of monthly savings, and I could have gotten behind that. But when the numbers were that small, I'm like, dude, for $100, man, come on. All right.
Yeah, well, we got to take a break, but when we come back, spoiler alert, I'm gonna agree with you.
All right. Brian's coming back. ScheduleLoanAppointment.com. He doesn't have a 50-year mortgage to offer you, but he's got a lot of great products, including the time to own in Connecticut. Still money left in the time to own?
Yeah, they still got over 20 million.
Good. ScheduleLoanAppointment.com, OneTeamCT.com.